Greetings. Welcome to my weekend market recap. It's a nice day today, 11th November 2023. I am Sagar Nandi, retired IT professional swing trading stocks in the USA and India markets using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I sometimes share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. The ideas that I share, I try to make them truly high probability by combining technical analysis with market, sector, industry, fundamental analysis, and sometimes even seasonality analysis. That's what tends to make them truly high probability trades. You may keep an eye on them. And you may apply the same approach in your own trading, whether you are using the same Q systems or not. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems and only Q systems to make my trading decisions. Q has multiple components. All the components run on Metastock platform, and all the Metastock platform components are applicable to the USA market as well as global markets. And technical analysis component is also available on the TradeStation platform. TradeStation is applicable only for the USA market. In my market recaps like this one, I try to use both the Q Global on Metastock as well as Q Elite on TradeStation to show how I use them in real life. Let's start with the real life systems now. First, a look at the dollar index. I like to often look back and review how I analyzed the markets earlier and how they played out. Earlier, there was a trend line support here. This is dollar index. When dollar index was here moving inside a range created by trend line resistance and trend line support, at that time I had mentioned that if dollar index breaks, that might provide some support to the market, and it indeed broke. And right when dollar index was dropping, the market was going up, I changed my market view to bullish view. We look at the market ETFs or futures shortly. I started buying when the market was oversold and then it gave me a buy signal. And last week I mentioned that I stopped buying because the market suddenly went up sharply, quite a lot. From very oversold condition, it became nearly overbought and I stopped buying. Now we can see that dollar index has gone back inside the range. If we extend the trend line support, it is just about at the trend line support, extended trend line support that was broken at this point. If it goes down from here, then that will provide support to the market from the dollar perspective. If it remains inside the range, that may not provide bullish support to the market. That is dollar index. It is trying to go back inside the trend lines created range, but we'll have to see if it is kind of dead cat bounce that tries to go up, hits the lower edge of the range and goes down. If that happens, that may provide bullish impetus to the market. Before looking at the USA market, let's look at some of the global markets. The point is to explain how the same analysis can be used for any liquid market. And the markets are of course interrelated, USA market being the biggest, deepest, broadest, etc. Australian market, all ordinaries index, in a downtrend. I try to decide two things when I'm looking at any instrument. What is the direction of the market and what is my preferred trading direction? The direction is downtrending. It follows the classical definition. It has lower high and lower low. It went to oversold condition seen from multiple angles. It went below lower boundary, even jump thrust hit low point, stretch was oversold for many days, then bull release came. From oversold it went up, but the downtrend is continuing. It stopped right at the yellow direction line resistance. On Friday it went down, gave a bear release signal. The weekly has a long upper tail. The candle itself is indecisive in weekly, that is a doji candle. Overall it is in a downtrend and we have tilted down from a swing high in a downtrend. Looking at that, my preferred trading direction in all ordinaries is also bearish. So it is bearish direction and preferred trading direction is also in the same direction. Let's see what is our analysis, or my analysis at least, of the Japanese Topix index. Topix is not as weak as all ordinaries of Australia. It is moving inside a range. It is near the upper edge of the range. So if it tries to go up, reverses from the trendline resistance, then I like to short it following the box short trading techniques. That is, short at the upper edge of the range if price tilts down from the edge. Buy at the lower edge of the range if it tilts up from the range, hopefully using a bull release for buying and a bear release for shorting. Topix direction sideways, and I will like to short it if it tilts down next week from the trendline resistance. I'll wait for that. China market CSI 300 index. Downtrending. Direction is downtrending. Like Australian market, it became oversold, went well below the lower boundary level. The stretch band indicator also showed oversold condition. Then came the bull release, recovered somewhat but stopped below the yellow direction line, stopped below the trend line resistance. Price came down. Friday we have a bearish color candle in the daily. Weekly candle shape is bearish. I like to short the China market as well. Market direction bearish, preferred trading direction bearish. UK market FTSE index. This is also moving inside a range created by trendline resistance and support. Here price is closer to the lower edge than to the upper edge. If price could come to the trend line support and bounce up, maybe give me another bull release signal that we had earlier. If that happens, then I like to buy at that point. But if it breaks down below the support, that will be bearish. Here the weekly candle shape is indecisive, color is bearish. Currently I have no preferred trading direction, unlike in Australian market and in China market, where I am clearly taking a bearish preferred trading direction. For FTSE I don't have any preferred trading direction yet. I can go either way, bullish way if it bounces up from the support, bearish way if it breaks below the trend lines. And lastly, India's Nifty 50, last of the global markets. Now it is downtrending. Lower high, lower low. From oversold condition shown by price being below the lower boundary, as well as shown by the stretch band indicator being oversold, it recovered just enough to come to the yellow direction line and trying to tilt down from there. There is a trend line resistance as well. Next week, if it comes down from the trend line resistance and yellow direction line, I'll prefer to short, because it is in a downtrend and it is trying to make a swing high. If it gives me a red color candle in the daily chart, that will signal opportunity to take low risk short trades in individual stocks. We looked at multiple global markets and none of them I have a bullish preferred trading direction. For several of them, I either have a bearish preferred trading direction right now, or I am expecting or preferring them to turn bearish in the coming week. What about the USA market? So far for global markets, I was using Q Global on Metastock. For USA market also, we can do the same. Before looking at the market external view, that is looked at through the ETFs or futures, let's look at the market internal health check for the USA market. USA market felt like bullish market. But if I look at the very powerful and colorful USA market breadth total view, it is not looking so bullish. Last weekend, when we had the market recap, we were here. We were here precisely on this candle, and I said that I was not going to buy anymore. At this point, I was starting to buy. I bought and I shared some ideas. One idea actually I shared publicly, BTI, that hit the profit target that I explained in the previous market recap. But at this point, previous market recap, I said I stopped buying. What happened after that? This week, market looked at through this total view, internal health check. This candle chart is not of any particular stock or not even one index. It's a composite of all the major indexes and composites in the USA market, and that market practically moved sideways for first 4 days, and on Friday it tried to go up, but there is no strength in the market because the accumulation count is only one, didn't even turn green. One is insignificant, and this accumulation count of one came from where? We can see that at the bottom it came from Nasdaq 100. Specifically from where in Nasdaq 100? It came from mega caps. Let's look at the mega cap custom index. it is moving sideways. The upper edge is created by trendline resistance, the lower edge by watermark support. Using the principle of box long setup, I would like to buy here. Using the bull release, I would like to buy here. Maybe using the bullish flow at the lower edge of the range again. We can see the strength of the mega cap custom index. In fact, take mega cap custom index on Friday. On Friday, it went up sharply. Prior to that, it moved sideways. Friday's move up were driven by Nasdaq, was driven by Nasdaq 100, and in turn that was driven by this handful of mega caps. Where is this index now? It is right near trendline resistance. If it reverses from the trendline resistance, or even better, breaks the trendline resistance and immediately reverses back inside it, creating a false upside breakout, that will be even more bearish for the market. Let's look at it also using the weekly daily chart. I'm doing it live actually. This week I didn't have time to look at these charts earlier. We are seeing that the mega cap custom index is also having a weekly trendline resistance. So if it reverses from the weekly and daily trendline resistance, or even better creates a false upside breakout, that will prove bearish for the mega caps, that will in turn prove bearish for Nasdaq 100 and the broad market as well. Broad market itself is not very bullish. If we look at QQQ, last week I stopped buying. We were here. That time QQQ had a trendline resistance. The trendline resistance is broken this week, but we saw that was, and we can see here also, that was mostly because of the move up on Friday, which was again driven by the mega caps. And now it is near another trendline resistance nearby in both weekly daily. I will not like to buy. The positions that I bought at the oversold condition, those could be held. Partial profit could be booked once the initial profit target was hit, and remaining position could now be held. That is the Q approach of booking some profit and also trying to let profit run. But I will not like to buy now, looking at the immediate trendline resistances in QQQ. SPY, why not I also give Q Elite on TradeStation a chance? Let's look at, no, not that one, SPY. SPY is also near trendline resistance in both weekly daily. Can it break through the trendline resistance and go up? Yes, but that is fine. Anything can happen in the, only three things can happen in the market. And that is true every day of the week, every week of the year. It can either go up, it can either go down, it can either move sideways. Those are always true, but I don't trade based on that. If there is a trendline resistance nearby, I don't like to buy. If there is a trendline support nearby, I don't like to short. So here I will not like to buy. Same view for SPY as I had for QQQ. When did I buy and publicly announce that? At this point. Again, partial profit could be booked in those stocks. If they hit the profit target, partial position could be held. But I will not like to buy now. DIA, for both QQQ SPY, the up move came on Friday. DIA is no different. For the whole week, it moved sideways. On Friday, little bit it went up. In the last market recap, I explained that at this point, Dia was the easiest to buy using the unambiguous Q signals. It had a bullish headwind with big move up 3 near jump thrust low. That was the easiest one to decide on buying, and weekly also recovered above the trendline support. Why I reviewed that is at that time Dia was easiest to decide to buy. Yes, QQQ also went up, but from technical signals point of view, Dia was the easiest one to buy using Q signals, unambiguous signals. And I see that now also Dia is the easiest one to decide to buy. It has a bullish flow on Friday and it is trying to clear this sideways range which is at the watermark resistance. Weekly is bullish also. There is no trendline resistance nearby. The resistances are far away. So what was true at the market oversold point, that Dia was the easiest one to make a buy decision for. I have the same view for Dia today also. If the market goes up, it is easiest for me to decide to buy Dia, that is industrial stocks. Using Q index, you and I could easily look at the constituent stocks and figure out which ones of those constituent stocks are resulting in Dia to go up. And if they are fundamentally strong, we may buy those instead of buying the Dia itself. Small cap was weak for quite a long time and it is remaining weak. Small cap came down considerably this week. My last market recap was here. 1, 2, 3, 4, 5. Right when price stopped at the yellow direction line. We saw when looking at the global markets that several of the global indexes also stopped at the yellow direction line. That can act as a significant resistance if the yellow direction line is declining, as in this case. On Monday, IWM could be shorted or small cap stocks could be shorted and those gave a significant profit. Which one would you short on Monday? Again, in the last market recap, I explained I was not going to buy. That was on Friday. And I was looking to short on Monday. On this day, which one would I short? I'd look at all the market ETFs and see which one was the weakest, and I would do that using the market percentage chart. There is a chart on Q Global that shows which of the major markets are weaker, and IWM was weak not only on Monday, throughout the week it was weak. So I would, all Q traders would look to short IWM or small cap stocks on Monday and would continue to hold those trades, probably book partial profit already. So when we look at the market internal health and then look at the market ETFs, it seems that the strength is largely, or I should say very largely, because of the mega caps. And the mega caps are also near trendline resistances. Again, a not time that is not for buying stocks. We could buy stocks when the market was oversold. IWM was also at jump thrust low. Then like Dia, IWM also gave big move up 3. That was the time to buy, not now. Is that view supported from other market angles? Let's look at the sector industry stock advanced decline breadth. Sector industry stock advanced decline breadth. On Friday, it is green, bullish. However, over 2-day period, it is mixed to bearish. If we look at all the 3 pie charts, we have to say that it is more bearish than bullish. Over 5 days for the whole week, it is very clearly bearish. So yes, Friday market was bullish, but clearly we saw it was because of the mega caps going up. Again, mega caps are also near resistance. So that is not giving us enough confidence to buy. Now, if we take a step back and look at these periods, 1 month period bearish, 10-day bullish, 5-day, 2-day bearish, 1-day bullish. So bearish, bullish, bearish, bullish. If it continues to be bullish, there is a case for buying, and as we saw from the objective analysis, I'd like to buy dia constituents or industrial stocks if it goes up. If it goes down, that is also possible, bearish, bullish, and bearish again. If it goes down, then we'll use the market percentage chart to decide whether the mega caps are now turning down or the small caps are continuing to go down. Small caps are continuing to remain weak, look for shorting there, and if the mega caps start to weaken, then may look for shorting there. Right now, there is one conclusion that there is not enough signal to buy. The weekly period is actually bearish. Just 1 day's bullish strength because of the mega caps sharply going up does not let us buy many stocks. If we look at the bucket analysis, it turned bullish, not overbought, not oversold. The bucket analysis shows overbought condition when the percentage of stocks in the uppermost bucket hits 30-40%. It's nowhere near that. Of course, it's not oversold. More bullish than bearish, it can go either way, neither oversold, nowhere near oversold or overbought condition. And very importantly, if we look at technical breadth, when we are trading stocks, directional trades, we make money only if the stocks go in our direction. So technical analysis is very important, of primary importance in short-term trading. And the weekly period, Q finder technical breadth, the balance between bulls and bears, is clearly bearish across all categories. If we look at the daily period, yes, it is bullish. Friday was bullish all across the board from all the market angles, but that was driven again majorly by the mega caps. That does not give enough confidence to buy. There is no case to short yet. Now, let's spend some time on technical analysis then. I will not try to look at many stocks. We saw mega cap has strength. Let's see if any of the mega caps are in a buying situation. I have no fixed format for these market recaps based on what the market is showing. I vary my analysis for my own trading and also in the market recap. This is Apple. Clearly strong, but it is also very overbought, far away from the swing low. Remember, I explained the box setup principle. Buy near the lower edge of a range at watermark support using the bull release signal. That was the time to buy, not now. It is far away from the swing low. If you are following the disciplined Q approach, why wouldn't you buy here where the stop loss would be very close by? That would be a much better decision in terms of risk management, not now. So yes, it is bullish and we can see Apple is a very high market cap stock. how it influenced QQQ and the whole market as well. Not IWM. IWM came down. IWM is not influenced by mega caps. It's small cap index. Let's look at AMD. I was looking to short AMD if it came down, if it gave a proper Q short setup. I explained that in the last market recap why I was looking to short. There was a trend line resistance and there was a watermark resistance also, but it did not give a short setup. It also went up, so I didn't short. AMD is also very high, far above the recent swing low. It's overbought for many days. I'd not like to buy now. Again, I try to answer two questions. What is the direction and what is my preferred trading direction? Direction is bullish for Apple, for AMD, but it is too overbought for me to buy. Amazon, far above again from the swing low. Not a time to buy. Yes, bullish. It is above the previous high, went up strongly, but it is too overbought. Google, also far above the swing low. It's not in an uptrend, didn't break above the previous swing high. If the mega caps turn down, if Google turns down from the yellow direction line, I will like to short Google more than I like to short the other stocks we saw, Apple or AMD or Amazon, because Google, if it does, if it comes down, it will come down from the yellow direction line while being in a downtrend with lower high, lower low. In a downtrend, recovery to yellow direction line coming down again, that will give me a short setup. But I'll wait for it to come down. If it does, and I'll wait for a proper Q short setup before shorting any stock, including Google. And I will also look at its fundamentals and industry scorecard to align all the forces before shorting. I'm just looking at multiple mega cap stocks, not that they will be the most attractive long or short. None of them are attractive long now. And now we are looking at Meta, again far above recent swing low, right near daily and weekly watermark resistances. What is the direction? In a range, in a box. At the upper edge of the range, not a time to buy. If it tilts down, I like to short. Again, I'll wait for a proper short setup. When I say I like to short, I will like to short if it gives me a proper Q short setup. Microsoft. This is the strongest of all the mega caps we saw so far. Very strong uptrend. Made a new high. Again, too overbought. Where would we buy? We would buy precisely at this point using the flow trend following long setup. We had a bullish flow. This tick bullish flow, the weekly was bullish. So we would like to buy at the swing low right at this point. Not here, that's too overbought. Again, direction is bullish, but preferred trading direction, none. Netflix. Again, whether you consider this one or this one as swing low, far above the swing low, it is breaking out, but far above swing low, I will not like to buy now. Again, this one is bullish, higher high, higher low, but too overbought for me to buy. And you see, in all these mega cap stocks, and in general, my focus first is on risk management. Tesla. Tesla is not bullish. Earlier, I saw Google was relatively weaker than all the other mega caps, and Tesla is the weakest. In clear downtrend and below yellow white direction lines both could not go to either of them, and this is the one that has red candles in daily. In fact, you could look to short on Thursday itself using real-time charts. The weekly was always magenta. So this actually gave a flow short setup on Thursday, trend following short setup, because it was in a downtrend, lower high, lower low. Weekly was always in magenta color, bearish backdrop, recovered, but downtrend was continuing and then gave a bearish flow candle, bearish flow setup. So on Thursday, using real-time charts, you could short. But will you short? That's the question. The answer comes from the complete 360 degrees analysis. Here I am spending time on each stocks, but the first decision I make at the market level by looking at the analysis I showed. External market view using ETFs or futures or indexes, internal health check using Q Global Market Breadth, sector industry strength using Edge, and technical breadth using Finder. Looking at all of them and the global markets, I first decide whether at the market level I like to buy or short or stand aside. Yes, Tesla did give a short setup technically on Thursday, but on Thursday I didn't have any preferred trading direction on the market. I like to align as many forces as I can with my trades. Market is an important force for my trades. So on Thursday, Tesla gave a short setup, but I wouldn't trade. I wouldn't trade on long or short direction either. I bought when the market was oversold. Incidentally, Tesla displayed this unique bullish headwind, very unique reversal signal right at the bottom. So many reversal signals came at the very bottom in mega caps, in market ETFs, etc. That was the time to buy. That was the time I suggested buying. That was the time I bought and I shared buying ideas. Now, just because Tesla gave a short idea on Thursday, I wouldn't trade it because I had no preferred trading direction. Now, we completed looking at all the mega caps, and the conclusion is that none of them are giving a low risk buying opportunity. In fact, when we looked at the mega cap custom index in Q Global, we saw it is nearing trendline resistance. So mega caps are holding the market up. Mega caps resulted in Friday's market going up quite largely. We can see the percentages by which the market ETFs went up on Friday. IWM went up by 1.1%, QQQ very much affected by, directly affected by mega caps, went up by 2.2%. But that was because of the mega caps, but none of the mega caps are telling me to buy. That is not a time I like to decide on a bullish preferred trading direction. Neither do I have enough weakness signals on the daily chart or daily market breadth, daily technical breadth to decide on a bearish setup. So that in a way makes my trading decision quite easy, less time consuming. I have no preferred trading direction, and if that is the case, there is no point for me to look at individual stocks to trade. I'll not like to do that. I have real-time queue systems. I can identify trading opportunities in a very short time using real-time data. I will do that next week when I have a preferred trading direction. Right now I have no preferred trading direction, so I will end today's session here. I will keep an eye on the market. If I see market is changing, and I have preferred trading region, I'll share them on Twitter or X as always. Thanks a lot for attending. I look forward to seeing you in my next market recap. Most likely it will be next weekend. Have a great weekend. And as the live analysis show, as I always like to say, there is no reason not to do that. Manage your risk first and then trade profitably. Thank you.